Well, Malaysia's central bank has raised its benchmark interest rate for the second straight meeting as it battles inflation. It lifted its overnight policy rate by 0.25 percentage point to 2.25% after raising it from a historical low of 1.75% at its last meeting. Now, the hike marks Malaysia's first back-to-back rise in more than a decade. Malaysia's latest inflation at 2.8% appears low compared to other countries, but the finance minister has warned that inflation could have exceeded 11% in May without subsidies that include price caps on chicken and eggs. Still, food inflation rose at the fastest pace since October 2011. Well, despite the rate hike, the ringgit continues to weaken against the greenback. It has dropped about 6% this year so far. And our correspondent Melissa Goh told us earlier that economists are betting on more rate hikes amid worries over the impact of the weakening local currency.
Some economists have raised concerns about imported inflation with the weakening ringgit. Now, Malaysia is a net importer of food. Now, although there are measures put in place right now to produce more to help reduce the food bills, it takes time. And the government has been subsidizing heavily in both fuel and food prices. Now, take petrol, for example, that's kept unchanged at 2 ringgit and 5 cents per litre, and that's less than 50 US cents per litre. And that's probably the cheapest in the region now, and that's costing the government over $8 billion in fuel subsidies this year. And the government has launched a special task force to combat price hikes in essential goods. They are under strict price controls and also dishing out more cash handouts to help the lower income group. Now, it's worth to mention that more than 60% of the fuel subsidy goes to the rich, the top tier. Those are making a lot more money. So there's something wrong in the fuel subsidy, and they are trying to change it into a more targeted subsidy system, but which they haven't decided when to do it and how to do it, given the election could be as early as this year.